Standard marriage vows, if you've been to a wedding, even your own, include the phrase, till death do us part. Standard banking agreements do not include that phrase, and yet you'd think they do because Canadians are so reticent to switch banks. For some of you, you love your bank, you love them till the day you die. For others, you don't love them, but you don't know what to do about it. So today we are going to talk about how to know when it's time to switch and what do you actually do? What are the logistics involved? Our guest is Lesley-Anne Scorgie. She is the founder of MeVest. She is a personal finance columnist, and she joins us now from Toronto. Hello there.
Hello, Bruce, and what a subject. Break it
I
up with your
know.
bank, right?
Why is it so hard? In other countries and other cultures, people can do it all the time. Here in Canada, I wasn't kidding when I said it feels like till death do us part.
Well, it's actually, I think, maybe a little bit easier than people think, but there's a myth around it that it's complex. And let's face it, anytime you're in a long-term relationship with your bank, with another person, you don't want to disrupt the apple cart. However, people are switching institutions at, I think, a higher pace. Certainly, the data is starting to show that because the offers to switch are getting very sweet. And let's face it, when it comes to an extra interest rate point or two on, let's say, a loan or a mortgage, or even a fraction of savings, you're going to move because
Right.
you want more money in your pocket.
So, from your perspective, you'd say it's more a move to than a getaway from. Because I also hear so much frustration with the banking experience and the fees, but you'd say it's actually they're becoming better marketers at drawing new people in.
Like, I think that is a much bigger factor nowadays than it was even 10 years ago. And I hear those horror stories too, believe me. Like, I have some myself
Yes.
that I could share. However, I think what's happening is like these offers are pretty sweet. And like, when else were you ever before offered like a brand new Apple Watch or computer to just switch your mortgage? Or, just last week, I saw one of my students get paid $2,500 cash to move their mortgage. These are big, big incentives. So, I think the other piece is there is a bit of a myth that's getting broken down right now. And it used to be that nobody moved because it was extremely annoying to do so,
Yeah.
or at least we thought it was really annoying.
Yeah.
And as it turns out, you can actually do it. Like, once you know where you want to go, usually that's a factor of like, where's the best offer? Where are the branches located? Do they have what I need? You make your appointment. Sometimes you can do it virtually. Well, oftentimes you do need to get yourself into a seat though at a branch. And you open up these new accounts. And then at the same time, just don't forget you do need to set up your mobile banking, and it can
Oh,
be really quick. And I gotta tell you, so last week, I actually opened my daughter's first bank account, and she's 2. It was like
of course
very,
she's two, and of course she has her first bank account.
yeah, it's like this, of course, right? You're talking to me. So it was like an offer, and I won't name the institution, but it was a fabulous offer where her savings is going to be at 5.75%. And she's 2. This is on top of her RESP, right? Like, this is fantastic. So the whole process was actually fairly easy. 45 minutes. I was in and out of there, and I didn't even have to take my 2-year-old to the appointment. Can you like imagine bringing a 2-year-old to a
Oh, I
banking
have had to
appointment?
do this before when my kid was two. It is no fun. Now, one of the things I know from my own experience about switching investments, like at an
Mhm.
institution that holds your investments, is the new institution takes the lead. If you don't want to, you don't even have to tell the prior institution
Yeah.
if you're breaking up with them. When it comes to the other parts of banking, is the onus on the new institution? Do they take the lead in that way?
Basic banking, the answer is no. Let's say you actually have to set up a new checking, a new savings. and a new credit card at the new institution. You got to go in there and do all that yourself. And then you got to go over to your old institution, get all your money out of there, move it over to the new institution, and close out those accounts if they're not serving you anymore. It's a little bit different from the investment side. Like, I also think on the investment side, this is where I am also seeing so much more competition. Like, the advisory network is saying, we'll do everything for you to move this. And the same thing is happening in the mortgage market, and also with like mortgage-like products like HELOCs. Those are well taken care of because there's just so much money made from them.
What are some of the pitfalls that you would have people be aware of? And the first one that I bet you'll agree with is on credit cards. Given how much credit history counts to your credit score, we don't want people like shutting down one credit card and opening up another one at the next institution. Talk a bit about that one in particular, and then let's see if there are any other pitfalls.
Yeah, like that's a sensitive one, and not just credit cards. It's like with any lending product. The more applications you have, what we call hard credit score inquiries, where you're actually like opening new accounts and getting new credit, it can have a temporary effect on your credit score. You will see a decline in your score. And so I always say, like, is the timing right? The second thing that you pointed to is credit history. Like, with some of these institutions, you are there, you've been there for like 10 years, 15 years, in some cases 30 years. And that's a long, beautiful credit history, hopefully. And so you are kind of leaving that behind. So I always say, like, make sure it's worth it and that your timing is right. You do not want to be doing this if you're about to buy a house, or if you're about to, like, yeah.
The other thing that I learned was I wanted to get out of a high fee credit card, and rather than lose me entirely, they moved to a no fee cash back card. So
Yeah.
I'll keep all my history, even if I don't use that card very much at all. I'll keep that credit history on my credit score, which I like.
Absolutely. Well, and I think you're talking at another point, which is, if you tell your institution, like, I'm not happy, I want something different, I don't want to pay these fees on my credit card anymore, you might be surprised that they are willing to do something immediately on the spot to lower an annual fee, eliminate it completely, switch you to a new product, but still maintain the history. I've seen some extremely creative solutions. Like, I went in to go get a bank draft a few weeks ago, and at my primary institution,
Did you ride in on your horse?
right?
What a bank draft is.
I had to get it was like, I haven't had to get one in many years, and I had to go get one it was a few weeks ago, and they were about to charge $25 for this bank draft. And I was like, absolutely not.
Yeah.
Absolutely not. And right there on the spot, they waived the fee. But yes, I laugh because who needs these anymore? But
Yeah.
there are certain cases where there's products and or services that you need to pay for, that you can ask for fees waived on.
So if we look at the steps, there's this insight that I'm willing to change. There's this compelling offer. I do my assessment of all these things. Then I sign up for the new accounts and the new cards and all that stuff. It's like kind of like moving into a new apartment. So you've got this new apartment, you've got this new institution that you have a relationship with. What are some things that you need to do to sort of unpack in that new apartment? Like you mentioned your daughter's RESP. I bet
Yeah.
there's some automation that would be really smart for you to
Yes.
set up in this new world.
All of those pre-authorized payments that you've got going out the door, even your paycheck coming in the door, all of these places need to be contacted with your new banking information. And then there's your savings habits, which we always encourage, that you've got some regular automated savings happening maybe on a weekly or biweekly basis. You're going to want to reset those transactions up at your new institution. And it's like conducting an orchestra. It's very beautiful, right? Like, when you're cueing all of these savings and debt repayment and your pre-authorized debit, it's all coming together to be this lovely sound of a system that's working for you. And if this is maybe the first time you're hearing about that, take a look at setting up a savings program. It's well worth your while.
I think you could apply some of your thinking in a less dramatic way, like maybe you're not shifting institutions entirely, but
Mhm.
you're not going to be quite so automatically loyal on your mortgage because that's a super easy one to shop around for and switch every time, right?
Absolutely. Yeah, and I think you're seeing more people take specific products and farm that out first. Let's see how that goes when we're up for renewal. Every point counts on that. And you're also seeing people not get super sticky with their primary institution on credit cards anymore because it has everything to do with what your needs are. Are you a family? Do you need cash back on groceries? What do you need? And that's how people are driving their decisions now. So it's all very good, very healthy.
How often is this like a once in a lifetime switch or a twice in a lifetime switch? Or do you think there's a case to be made for people every 5 years just doing an audit and saying, are my needs being met here?
I think you should look every year. Don't wait five. Take a look.
No less lazy than I am. I am so lazy. I've been with the same primary financial institution since I opened my first account in London, Ontario, back in the years.
You are very, very loyal. So I think as part of your like annual health check when it comes to your finances, you should always be looking, am I getting what I need? Do I need to make a change? It's like think about it as like almost like a renewal, right? And if you're
Leslie Ann
not
said,
getting,
Leslie Ann said, don't be afraid. It's going to be
don't be
okay.
afraid.
It's going to be okay. Thank you so much for your time and for your insight. I appreciate it.
Thanks, Bruce.
Lesley-Anne Scorgie, columnist for the Toronto Star, founder of MeVest, author of about 13 gazillion books, and appeared on the Oprah Winfrey Show as a teenager.